What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. That means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns of the week from all the major FAANG stocks. We kick things off like we always do with Meta, otherwise known as Facebook. Start of the week closer to $167, end of the week closer to about $170 per share. This is after Mark Zuckerberg appeared on CNBC's Mad Money, and he says that the metaverse will be as big a business as the current social media business Facebook, Instagram, WhatsApp operate for the company. Now, look, I think most investors should simply just price this into the stock that yes, the metaverse will probably become a very large business. The unanswered question, and one that I think is far more important than deciding if the metaverse is going to be a success or not, is when and if the metaverse is a success, what does that do to the revenues of Instagram? What does it do to the users and revenues of Facebook? And what does that do to WhatsApp? Does simply all that traffic or a large portion of that traffic transfers their online identity over to the metaverse? Or do both businesses continue to thrive and grow? If the latter is the case, that the metaverse is this great thing that Mark Zuckerberg and a lot of other people are touting out there in the interverse, and at the same time, people will still be posting on Facebook, Instagram, and WhatsApp, well, this stock is wildly undervalued, probably by a factor of 5. Now, moving on to Apple, start of the week at $135 per share. Boom. Apple up 4% in a week, closer to $141 per share. This is after Apple CEO Tim Cook, who plays things so close to the vest. This was somewhat surprising when he said, quote, "Stay tuned," as the company teased its off-rumored AR kind of VR headset. We're not exactly sure what Apple is producing, but we do know from a news story at least a week or two ago where they've shown a device to the board of directors. So they have a prototype in such working stage that they're actually willing to show it to their board of directors, which obviously are probably giving them advice on, is that market ready? Is that device ready to go to market? Is there something else they can add to it in and about the times when they're going to launch that type of device? Tim Cook appeared in an interview in China Daily, and he says the thing critical to any technology, including AR, is putting humanity at the center of it. And that is what we focus on every day. So some clues there. What Apple is working on certainly will be a much anticipated device. And a lot of analysts have already chimed in and believe that the device will be announced sometime in January. That would be January of 2023. Lawmakers press a probe of Apple and Google over mobile device tracking. Now, this actually is kind of a backward-looking probe. They're looking for the FTC to kind of probe this. In Apple's case, they've launched a wide series of protections that seem to do an okay job, at least giving the user some choice of opting out of this. It obviously doesn't necessarily default to opting out, but it does give you the choice as user. Obviously, Google's been a little bit more hesitant to do this, considering the bulk of their, almost all of their revenue and certainly all of their profits come from online advertising. So they're not trying to stab themselves. They've been very slowly rolling out different types of privacy measures inside their Android operating system. Obviously, you have a deeper probe, some criminal liability, and if and when that leads to some type of regulation, that certainly could be negative for both of these companies. I would assume probably more so for Google, since their business is actually revolves around online advertising, whereas Apple is simply just selling devices. Now, moving on to Amazon, start of the week at $109 per share. It continues to trend up as it was up over 6% this week, closer to $116. This is after former President Obama and former First Lady Michelle Obama found a new home on Amazon's Audible audio feature. Now, this was rumored because we talked about a few weeks ago, Spotify was kind of out of the mix because it seemed like maybe Spotify was a little upset Barack Obama wasn't firing up the iPad and recording a podcast, and maybe Michelle Obama wasn't doing it as often as maybe they wanted to. They also, the Obamas, were putting up maybe younger talent. You know, they're essentially political activists, and I'm saying that in a positive positive way. Essentially, every former president, anybody that reaches that level of government, eventually after their careers, just influencing other politics and other politicians. And they probably want to use their platform to start putting forth voices that they want to become a next senator or, maybe a next president or something like that. And so they're going to run this deal through Amazon's Audible, but these recordings and podcasts and whatever they decide to produce, you'll likely also see it across other platforms, which was also the rub with Spotify. And I like Spotify's approach to this, where they want an exclusive deal to like Joe Rogan or whoever it is. Certainly has worked out well to a certain degree to satellite radio, locking in Howard Stern, I believe, decades ago. And so these companies tend to do that. I like Spotify's strategy, but I also like that Amazon's willing to step in here and partner with the Obama, because look, half the country really likes these two people. Now, the other half really probably doesn't like these companies. This is broadly speaking, but look, half of the country appreciating some content you're bringing to the platform, not necessarily a negative. Now, Amazon taps Doug Harrington to lead worldwide Amazon stores. Now, what we've seen over the last few weeks, especially, it's accelerated, and it's interesting on the timing. We obviously saw Andy Jassy take over at CEO, I think it was like last year, and we're starting to see a lot of executives actually walk out the door at Amazon. And so look, if I didn't have a much longer term thesis on Amazon, like I'm like 20 years out, I'm not really worried about what executives are there now and which ones are leaving. It's no big deal. But let's say I had a large position in Amazon, maybe when I'm in 20 years from now, and I want to protect my Amazon wealth that I've built up over 30 or 40 years. Well, I'd be doing some due diligence. Are these executives mad because they weren't named the CEO? Are they mad because they think Andy Jassy is just an idiot and he's not going to do a good job and they want to jump ship? What is the motivation behind these people leaving? If you're a longer term investor, I don't necessarily think you have to worry about it too much, because chances are you'll see at least 2 or 3 other CEOs with Amazon over that time frame. But obviously, if you have a more narrow and shorter term view on Amazon, based maybe on your age or how much money you have invested on the company, I would do a little more due diligence and see why these people are leaving. Now, the other broader discussion I want to say is Amazon's opportunity now is in physical brick and mortar. They've pretty much invested every last dollar they can, building a huge competitive moat about their e-commerce business. Now, especially if we have a recession, especially if we have bankruptcies in the retail space, which I would assume will accelerate over the next 12 to 24 months, well, the opportunity for Amazon to capture more sales, more dollars, more customers is actually physical retail, as we see the growth rates on e-commerce start to flatten out. Moving on to Netflix, big week for Netflix from a price perspective. Obviously, technicals we'll get to in a moment, but started the week at $176, ended the week at I'm seeing in the after hours up to $191 per share. That is an 8% move on Netflix in a week. You can imagine when you go up 8% in a week, from a technical perspective, you start setting up in a really interesting way. Now, Netflix cuts another 300 employees. This is according to Variety. This is on the heels. I think they did 150 workers. I think it was last month in May. These big tech companies that were, really kind of high flying on their stock. They didn't really have to worry about printing every last dollar of profit. Well, all of a sudden they'd become very cognizant of that. We've seen Facebook do a lot of cutbacks. We're seeing Netflix as well. We're seeing all these companies squeeze out every last dollar of profit they possibly can, because they know investors will be going through their earnings like a fine-tooth comb. Speaking of earnings and Netflix, they are the first to report July 19th. That's why, from a technical perspective, this thing's setting up a little bit differently. That's pretty interesting considering their earnings are upcoming. We'll talk about more of that when we get to the technical segment of the show. Netflix confirms talks for an ad-supported service with all the partners. This is Google, this is Comcast, this is probably the Trade Desk, anybody, Microsoft maybe, about integrating an ad-supported model onto Netflix so they don't have to build this out from scratch. They'll use a partner, share some of the revenue, share some of the profits, build up a little bit of knowledge, and then see where they want to take that into the future. Obviously, that's bullish, I believe, for the online advertisers. Now, Canada okays a law to to boost domestic content on video streamers. So if you are a Canadian and you're logging into your Google, it appears that there's a new law that when you open up your YouTube account, that the companies are going to have to start feeding you Canada specific content. So I tell you what, this is a great opportunity. If you're in Canada and you're a content creator, I would quit my job. And I mean, I'm joking a little bit there, but I would focus a lot on this because look, if these companies have to support showing Canadians to the Canadian public, well, I tell you what, that's great. In my opinion, you're getting like free promotion. Moving on to NVIDIA, started the week at 166, just up marginally, up to about $171 per share. This is after the semiconductor capacity expansion in terms of the fabs that they need to build these chips needs trillions. That's with a T, trillions of dollars in investments. This is according to the Global Foundry CEO. This comment came on the same day that we saw that Intel said that the Ohio expansion in terms of their United States fab that they want to work on may be delayed or scaled back as the CHIP Act starts to stall. Now, I can tell from the comment section of YouTube, I'm not necessarily talking about on our Friday series of videos, but especially when I do Intel videos, when I do other videos where there's a little bit of politics mixing in. And in this case, you've got the CHIPS Acts and the semiconductor business, obviously NVIDIA, AMD, Intel. I mean, you've got dozens of companies inside this business. When this CHIPS Act was announced, I got a lot of comments on my channel saying, hey, this is great for Intel. They're going to be able to build these foundries on the back of the American taxpayer. And I said, whoa, whoa, whoa. That is not how things work in Washington. These acts, so this is just a little primer there for those of you that maybe are out of the country or maybe not in tune. Maybe you're a little younger listener. You're not really in tune with how Washington, D.C. works. A lot of times these quote CHIPS Acts, they've given a sexy name. They get a press release. They get the CEOs. They get businesses. They get everybody talking about this CHIPS Act, which has not passed, which has not been up for a vote, which quite frankly probably hasn't even really been written. They get everybody excited about it. And then why? 99 times out of 100 in Washington, when something like the CHIPS Act gets announced that has bipartisan support, and if they put it up today, right now for a vote, it would likely pass with flying colors and you wouldn't see a lot of pushback by anybody. But 99 times out of 100, you get kind of this home run bill. Everybody kind of supports it for the most part. Why do these bills stall? And that is because of money. Okay. These companies know, well, guess what we can do? We can just stall the CHIP Acts. And then guess what Intel has to do? Okay. None of these companies have trillions of dollars laying around. They have to have the government help them. And the government is not going to help Global Foundries and Intel and any other chip maker until their backs and their palms are so full of grease, otherwise known as money. That is why these bills stall out. That is why this bill will probably, in my opinion, go nowhere, because in this climate, bailing out or giving corporate handouts, not necessarily something that's popular with voters of either party. And on top of that, they can milk this into the next session, the next year, the following year, into millions and millions of dollars of campaign donations to finally get a bill like that over the finish line. Moving on to Google, start of the week at $2,200 per share. End of the week, nice, up nearly 7% to $2,360 per share. Netflix ad partner on the hunt. We talked about this in the Netflix segment. Just in case you didn't watch that, I do want to note that Google appears to be maybe in the hunt to serve ads onto Netflix. And I love that idea because all of a sudden that might accelerate more companies like putting investment into video ads, which certainly would help me as a creator here on YouTube make an extra $1 a month. Now, moving on to Microsoft, start of the week at $253 per share, up nicely, just like most of these stocks, to $267 per share. That's over a 5.5% move. Now, Microsoft curbs selling of emotion guessing software and limits its facial recognition tech. This is obviously due to privacy concerns. There's probably some like kind of social justice type concern here as well. Microsoft doesn't want to appear maybe insensitive to that issue. When I see something like this, you're giving up on social emotion guessing software. there and you're limiting facial recognition tech, well, this opens up the door to a bunch of other companies, in my opinion. There's a lot of use cases here. Yeah, there's a lot of kind of social discussions, maybe privacy, law-based discussion that other startups will be more willing to take on. Microsoft playing it safe in this case. Moving on to Tesla, start of the week at, was that right? $688 per share. This one's up 7%, all the way up to $737 per share. This is after Tesla partners with PG&E on a virtual power plant out here in California. So if you have solar on your house, you have the option to put batteries on the side to kind of catch your excess solar. Now that battery kind of sits there and just serves your home, okay, at nighttime or when there's no sun out or you're not producing enough energy for your house. Well, these batteries can kick on and kind of be a backup, almost taking you off the grid, but the grid's always there to really back you up. This is pretty cool in my opinion. Now, what they're going to do is these power walls are going to be allowed to push energy into PG&E's system, and you are going to be paid $2 per kilowatt hour sent back to the grid to help reduce and avoid blackouts out here in California. Interesting idea. This is one of the reasons why I put solar on my house. Why I do care about the environment and saving the children and all that, I care a lot more about money, quite frankly, and this makes real financial sense, especially in the longer, shorter term, maybe not. Longer term, absolutely. Producing, generating, and potentially selling your energy is going to be a huge business, obviously, going forward. Now, Tesla Berlin and the Austin, Texas factories are losing billions of dollars. This is according to Elon Musk. He says it's really like a giant roaring sound, which is the sound of money on fire, bigger than a dumpster. A dumpster is too small. Now, obviously, this came on the heels of Tesla stock soaring over 7% this week. So the bears kind of took that quote as, oh my God, they're losing billions of dollars. Oh my God, Tesla's going to be potentially going bankrupt. I think even Elon Musk said in here that he's just working to keep Tesla from going bankrupt. I don't think that's like a non-zero probability. I mean, there's a possibility that Tesla's demand dries up so much on their cars that the overbuild of a Berlin and an Austin will really hurt this company from a financial perspective. But the other case is kind of that bull case argument that the demand will stay there and maybe start to push even higher for Tesla. And these Berlin and Austin factories, while they lose billions of dollars right now as they ramp up to kind of full production, if and when they get to full production, holy crap, you're talking about revenue growth that you don't really see on Wall Street very often. Now, Tesla plans to slow production of its Shanghai factory for 2 weeks for an upgrade for a big ramp. They're trying to get up to a target of 22,000 cars being able to be pumped out of that factory, so that they got to basically shut down for 2 weeks, probably rearrange some things in the factory, maybe bring in some new equipment. But after 2 weeks, they should be able to get pumping to 22,000 a month. Again, that shows you the bull case argument for Berlin and Austin, the fact that the China factory is actually shutting down to produce more cars, the fact that Berlin and Austin are losing billions now, not a burden on investors in the shorter term, even the longer term, as they realize this is where the money pumps out into the future for Tesla. Now, moving on to the technical segment of the show. I'll remind everybody, this is the technical segment of the show. I will tell you what these charts say. I've received some comments here on the channel, and I totally respect them, that's saying, hey, I'm telling you, oh man, the market's going to go down, and then next week it's going to go up, and then it's going to go down, and then it's going to go up, and then it's going to go down, and then it's up, and then it's down. Well, guys, that's because that's exactly what the market is doing from a technical perspective. I mean, it has been absolutely like clockwork since the beginning of the year. And we've been chopping down in a very predictable order. Right now, the S&P 500, which is the chart we're looking at right now, bottomed out here last week. I bought a few stocks last week because look, if you can't buy this stock market's down over about 20% from the highs to the lows. If you can't buy it 20% down because you say, hey, it's going to get worse, things are going to get worse. Well, guys, here's a news flash for you. If you show up with a bunch of red candles here pretty soon, and you go down 40, 50%, do you think the news at that time is going to be even better? No, it's going to be even worse. There's no way, if you can't buy a 20% drop in the S&P 500, and I'm not talking about going and putting all your margin in or selling your house or getting a lien on your house or a second mortgage and going all in on the spot. I'm talking about buying 1 share, 2 shares, just as an act of discipline and an act of like practicing, okay? Steph Curry still practices layups every day. I mean, I haven't seen him miss one in a while. He practices them every day. This is a layup if you're a basketball player. This is hitting golf balls if you're a golfer. This is hitting baseballs if you're a baseball player. Look, when the markets go down this much, you have to step in and buy at some of these areas. Could these markets go down another 20, 30, 40, 50%? Look, absolutely. You start to look at the probabilities of stuff that happening like that at some point, but I think in the shorter term, absolutely. Now, from a technical perspective, we would actually expect these markets to continue to rise. I would expect them to get back potentially into the middle of this channel. Again, we're looking at the S&P 500. I think you could actually drop our channel down to about here. That means we could get to about 4,000, maybe a shade over that on the S&P 500 by as soon as next week. If and when that happens, and look, it doesn't have to go up next week. It doesn't change what I think is the high probability of happening after that. Maybe the S&P 500 stalls out right here, right where we're at, and it reverses next week. Well, if it reverses next week, you're coming lower than the previous lows here at 3,600, and you're probably coming south of 3,600 on the S&P 500. Where it bottoms out is anyone's guess. From a technical perspective, you're looking for this to do something different. We talked about it on last week's show. You're either looking for a dump down below the channel. That would, in my opinion, signal some kind of like capitulation or people just saying, I'm out of this market. That would be, in my opinion, a fantastic buying opportunity. If you can't buy during a capitulation type moment, you're not going to buy the dip, period. The other thing, obviously, on the bull case scenario is you continue momentum into earnings. All of these stocks, I'll give you their earnings date here in a moment as we run through them, but maybe we get positive momentum into earnings. Out of earnings, that would be a break above 4,000 on the S&P 500. That would break out of this technical trend, although I have it kind of smashed down here. Quite frankly, you really need to get up here 42, 43, 4,400 on the S&P 500 to really do something from the upside. That is why my tone has been consistent really since the beginning of the year when this downtrend started, is I would assume to the downside is the least path of resistance. To break through all of this, all the macro noise, and push to within a couple percentage points of the all-time highs, I think most of us as investors, even the most bullish ones, can say that's an outside probability. That is unlikely to happen. More than likely, you stall out at the middle or the lower end of this range. You put up red candles, you step out here, and you buy the dip again when it pulls down to the bottom of this range, which in my target down close to $3,600 per share. Moving on to Meta, which reports its earnings almost a month from today on July 27th. So it's really interesting how these stocks are going to set up over the next 30 days, which I would assume is maybe about 20 trading days. That's all we have until these earnings are on the doorsteps of these stocks. And so I think it's going to be really interesting over the next 25 trading days or so. How are these stocks going to set up into earnings, which are so critical? So with Meta, we came down to the bottom of the channel. Again, we've been calling this ever since the initial drop at Meta. And I'm not trying to pat myself on the back. You can believe whoever you want to. You can take bits and pieces, the information that I give you, and layer on your own knowledge and your own expertise. But we've had this one in this downward trend. When it's gotten to the top of the trend, that's signaled a sell. When it's gotten down here to the bottom, it has been signal of a buy. If you're a longer term investor, if you can't buy these dips on Meta and Facebook, if it takes an even larger dip, trust me, it's going to be even harder to step in there and buy. So I applaud you. Even though you're probably underwater on your investment, I actually applaud you from a discipline perspective if you stepped in here and bought the dip on Meta. Now, we are expecting this one to move to the top of this channel. That could take this stock back up over $180 per share. It would be really, really interesting is that on the eve of earnings, which again is in July 27th, on the eve of earnings, we're sitting at the top of the channel on Facebook because really strong earnings, maybe strong guidance, all those types types of things over at Meta, well, boom, that would shoot us up over the trend line, essentially breaking it, and would be really interesting. The other very interesting thing is if you're at the bottom of the channel on Meta, say we just stall out kind of midweek, and then we just work our way in the second and third weeks of July back to a lower low, well, all of a sudden, Meta hanging out at the bottom of the channel, oh my gosh, that opens up a really ugly set of circumstances if this company misses on their earnings call, gives really bad guidance. Well, you could break below this channel and you could do it dramatically. We'll see the setup. Very, very, very interesting time over the next 30 days or so. Same thing with Apple. Now, I've got some lines converging. It's sometimes good when you have a lot of lines converging. So with Apple, I have this longer term uptrend, okay? It really started back in 2018, kind of the first larger or one of the larger corrections that we had that wasn't really like pandemic related. So you had this big drawdown, kind of Fed tightening into 18. You had the Powell pivot, and then it's rocketed up there. And you notice kind of last week, it kind of converged right here at about $130 per share. And kind of as expected, Apple's been working its way up. It's got another area of support here on this red line here at about, I mean, their buyers are just stepping in on Apple at about $130 per share, give or take a couple of bucks on that. I would assume Apple into the next couple of weeks works its way to the top of the channel, probably north of 145, maybe as high as 155, 160, maybe even on this one, not out of the question. To break out of this downward channel though, holy crap, you've got to get above 180, essentially back to all-time highs with Apple. Otherwise, you'd assume what we've been talking about for weeks is you come to the top of the channel and then some news event or broader market happens, and then boom, you move back to the bottom of the channel, creating another set of lower lows. I think it's probable as we move into Apple's earnings, which are a day before Meta's, on July 26th, essentially about a month away, I think Apple moves to the top of the channel and then just sits here as investors wait news of not only this quarter, but more importantly with Apple as they roll over into a new iPhone product cycle. Everybody is anticipating that current Apple iPhone sales not necessarily going to be that great because a lot of people are waiting for the new model, probably including myself. So it'll be a little bit more about guidance and supply chain, I think, with Apple. Moving on to Amazon. This one's kind of in the, maybe one of the weirder formations. Yes, it's in this steep downtrend, but you made this big kind of like, I mean, maybe a head and shoulders. I mean, I don't know at this point. I think it's too soon to tell, but this downtrend, quite frankly, is still intact with Amazon. Amazon's earnings are on July 28th, so a day after Meta. And if you get any weakness into Amazon, a pull south of $100 per share, there's a pretty solid area of consolidation. I mean, the real bear case is you just slice right down that and you get sub like $75 per share on Amazon. I think, man, the buyers would really step in, but anything south of 100 on Amazon appears to be where the buyers will likely step in. I think more than likely with Amazon, we kind of hang out in this box between 100 and 130 until earnings come out, and then we'll see where that sends the stock after that date. Now, the interesting thing about Netflix, I mean, there's a lot of interest. I mean, there's a reason why we added Netflix back to the show. So some of you that might be new to the channel, okay, the original FAANG stock recap show was just Netflix, just FAANG and Microsoft and Tesla. Then we kicked Netflix out sometime last year when this stock was at its highs because we had no use particularly for Netflix at that point. I mean, the valuation was crazy. There were better opportunities, I felt, but we added this thing back into the program when it started making these monster moves down. And now what's interesting thing about Netflix is it actually reports on July 19th, which is almost exactly a week before all of these other companies report outside of NVIDIA, which reports a little bit, essentially a month after all of these companies. But Netflix, when we talk, so I just went and talked about how Amazon, we're not really sure how this is going to set up into earnings. Apple, a little bit more clear where I think this is going to set up into earnings. Same thing with Meta. I think we set up at the top of the range heading into earnings. I could be wrong. That's just the feeling I get right now. One of the reasons why I'm getting that feeling is because look at how Netflix appears like it wants to set up. We have this downward channel, and look, this downward channel that it's in is not set in stone yet. You don't have a lot of price action. You try switch to like a 30-minute or something, maybe get a little clearer view of this. But right now, Netflix is at the top of the channel. And if the momentum stays in Meta, Apple, Amazon, NVIDIA, Google, Microsoft, Tesla, if the momentum stays behind that stocks, and when I show you all these charts, I think you'll agree the probability is the momentum stays at least for a couple of days. Well, that would likely send Netflix a little bit higher. And what would be really interesting is if Netflix breaks out of kind of this downward swath it's been in and actually goes and sits on its post-earnings gap down price. That would be really interesting, because obviously a tremendously bullish report and a bullish call by Netflix could shoot us up through this gap, which would be just tremendous price action. And obviously the reverse could be true. Investors got maybe a little out ahead of themselves and this thing gaps maybe back down into this bottom channel. We'll see how Netflix sets up over the next 2 weeks or so, because again, their earnings come July 19th. And if they set up towards the top of the range, I would expect the rest of these stocks probably to do that as well. Now, NVIDIA, little bit different story. Okay, this one doesn't report earnings until August 24th. And so you've got about 2 months, almost exactly 2 months before NVIDIA reports. So its setup will probably be a little bit different. And then typically with NVIDIA, you have Intel, you have AMD, you have other semiconductor stocks report earnings, which kind of lead into NVIDIA. This stock is still in a gigantic kind of like double-edged kind of downtrend. I did buy this one last week. I don't know if I said that on the show or not, but I did buy this one when it's stuck in the box, because again, that is like Steph Curry practicing layup. This is like a professional golfer practicing like 4-foot putts. Like he hasn't missed that putt in 3 years, but he's still practicing it. That's what you do as a long-term investor. You have to buy the dips. I'm not talking again about a full allocation or doing every last bit of cash you have. 1 share, half a share, a tenth of a share. I don't care. It's about building discipline, habit. When stocks make these types of moves and you've done the fundamental research on it like we have, you have to buy these dips, okay? That's what we did. NVIDIA's popped up. Who knows where it will trade into earnings? Certainly we'll get some clues with the rest of these stocks. Now, moving on to Google, they report their earnings basically a month from now on July 25th. This one's setting up almost like Amazon. That's what's kind of interesting about Google, is it's on a pretty big downtrend, but it's starting to get real volatile to where you have price action just over the last couple of weeks, which has been as low as about $2,000 per share, and as high as, I mean, like 20% higher, up to close to $2,400 per share. So you've got actually a pretty wide spread with Google. I believe that's investors starting to place their bets now on which way they think kind of earnings are going to go. I would expect this price to kind of consolidate around a little bit tighter range. I would assume with Google, probably just south of about $2,400. I think we could stall out here heading into earnings, and that will be interesting. Now, moving on to Microsoft. This one's in a very interesting place, a different place than most of these other stocks. Now, I have compressed this downward trend line that we're in, okay? The reason why I compress it is you're really trying to capture as many candles as you possibly can in your range. That is showing you where, yes, there's some outlier events, okay, to the upside and to the downside, but we're only talking about a handful of days. The bulk of your data is in this tight price range. And then when you look at Microsoft, yes, it bounced off the bottom end of the range and come exactly as predictable as walking down the street. And like we've been saying here on the channel, I think some of you guys are getting a little bit annoyed by this. The fact that the markets are going up, down, every different week. It's me saying something else. I am reacting to what these charts are telling me. Now we're at the top of the range with Microsoft, but I do want to note that you could, if you wanted to put this upper trend line up here, that would mean that Microsoft could push up as high as maybe back to 275 in the coming weeks. Microsoft reports earnings on July 26th. Now, quite frankly, this stock would have to get north of about 290, in my opinion, to really show that, oh, it's doing something different. Again, from a technical perspective, you're looking at the pattern, and you can certainly trade this pattern if you want to, but if you're not interested in trading the pattern, which some of you might not be comfortable or have the experience or really maybe even the cash flow to do that, if you don't want to trade this downward trap, then the only thing you're doing is looking for something different. Something different with Microsoft would be a dump to the bottom. And this is quite frankly the truth with all of these stocks. You're looking for a dump to the bottom or a break above the channel. When it does that, that should be like, oh, whoa, something different is happening. And maybe there's some kind of market signal, like, the war in Ukraine kind of resolving. Maybe it's gas prices just suddenly starting to descent in value. There could be some kind of market move. If the Fed could say something or indicate or do something, could do that. But it might come on just no news, just nothing. Just a technical pattern. That is what you're looking for with Microsoft. You're looking for a break above or a break below. Right now, it's sitting kind of in the middle of the channel. We'll see if it can continue its momentum up and over that. Quite frankly, with Microsoft, if it guts up over this channel, that is something different. And I'm talking about kind of this compressed candle where we're not really capturing these big moves up. To my opinion, it's probably just another one of these moves where we go to the upside, only followed by another week, 2 weeks, 3 weeks of downward selling, pushing us to newer lows. Again, you step in there, I think, and buy that next coming low, which appears from a technical perspective might be happening. But again, the big wrench is you have earnings on tap. And we end our technical segment with Tesla as usual. Tesla reports their earnings basically a month from now on July 25th. You have them and Google on the 25th. Nice little mix of two different companies reporting on the same day, really give an indication on where the rest of these tech stocks will likely be. Tesla's still sitting kind of on the bottom end of this downward channel. It has some support for shares down here closer to 600. My opinion, I think a stock like Tesla probably continues momentum into next week. You start moving up to the top of the channel. I think it's probable that Tesla sets up towards the top of the range as we head into earnings on July 25th. You head into earnings, and then it's all about the conference call. It's all about the margins. It's all about the outlook, the supply chain. You could break to all-time highs on Tesla. I guess that's possible with Tesla because we see their backlog of their business and the type of consumer they target. Okay, yeah, $6 gas. Look, if you have electric cars and solar in your house, you don't give a crap about what the price is of gas. And chances are, if you could afford a $45, $50, $70, $100,000 car, you're probably a little more insulated on this recession. So it could be that's where Tesla goes. The other probability is you set up maybe towards the top end of this range and you come down on some kind of bad news. And in my opinion, as usual with Tesla, any kind of bad news, as long as it doesn't relate to margins, Elon Musk leaving for some reason, or slowing demand in their products, I think this is a stock that you're accumulating over a period of time. Now, hopefully you guys enjoyed today. Have a safe weekend. A lot of news obviously came out today. There's a lot of people really fired up about this type of stuff. Some of you might be watching and be very fired up. That is your right. I just want to caution you. Be careful, be safe. Your life, your living being is very, very important, not only to you, but your family, your friends, the people that count on you. Be safe this weekend. Feel free to express yourself which way you decide to go, but please, please, please be careful because these are one of those times where people sometimes go over the edge and it costs them everything. Hopefully you guys have a wonderful weekend. Be safe out there. Good luck with your investments.